In terms of the quote, invest in probabilities and never in certainties, absolutely. If you just look at the word probable, in geometry, it's probability. And that is exactly what chart reading is, pattern recognition based on probability. If something did X, Y, and Z over and over and over again, then it's highly probable that it's going to do X, Y, Z again with this same type of setup. And that's what trading really is. It's never about certainties. If it were that easy, of course, then everybody would be multimillionaires and we wouldn't be talking right now. So people really have to understand that probability means that there's a probable, high probability based if you're really good at what you do in terms of stock reading. But the probability doesn't necessarily mean that you can forget about the very basic fundamental of understanding risk and knowing when to take a profit.
One thing after doing this for a long time is I learned I can't know every input into the market, especially the fundamentals. Perfect example, when I was in the floor in the late 70s, early 80s, silver went from 5 to 50, back to 5. And by the time you found out the reason why, the market was either up the limit for a week or down the limit for multiple weeks. So you had to react to price and adhere to strict risk management. Otherwise, you end up broke.
All right, we're here for our last matchup of bulls versus bears. We're now talking about the bond markets, and we have Mish and Keith Schneider. Guys, welcome to the studio. Thank you for playing your part visually as well as with your charts. We have you guys are sharing charts, which is very appropriate. You two are happily married, I believe, but we'll see how that plays out in our discussion. Mish, you go first. Give us the bull case for bonds here.
Okay, well, I feel huge responsibility here, not just because I'm the wife, but I'm representing women everywhere. So here we go. On the monthly chart, as you can see here, we have just fallen to the 2011 high or breakout area. So in terms of the bullish case, this is absolutely the perfect place for this to stop and find support. If we move down to the volume, we have almost a capitulation of volume in these huge volume bars that have happened on a monthly basis, including as we're into October. Momentum on the low part there, not so much, but we're not so concerned about that on a monthly basis. So right now, we could say that 100 should be the max place for this to hold. Let's move on to the weekly. On the weekly chart here, similar situation. Now, we did have a new low close on the weekly, but again, look at those volume spikes, capitulation. Even though we are seeing the leadership continue to decline there against the S&P, it's actually holding up pretty darn well. So it's almost on par performance, which of course shows how tied in this whole market is right now to what happens to the future of the TLTs. And some people are very bullish at this point because the sentiment is so incredibly negative. Number one, the rate of change has been ridiculously fast, and the commitment of the Fed with keep repeating over and over about there's going to be more pain may be sort of overstated. But anyway, on the weekly chart here, we get any kind of hold to 100, we reverse over 102. There you go, off she goes, probably also the market.
Okay, and your daily chart is last.
Okay, the daily chart to me is also really intriguing because even though we made a new low on September 27th, I believe that big red bar is, we made another new low on Friday. However, we closed, the low on that September 27th was 100.90, and we closed at 100.98. So we actually closed above the low. If we move down to all the way down to the bottom to the leadership indicator, there you can see that we actually, again, took an upswing to actually become on par with the performance of the S&P. Interesting. Again, that incredible tide situation, kind of like me and Keith. And the momentum indicator, if you go back to that September 27th little dotted line blip down, with the low that we had on Friday, we have not matched the low of the momentum, which means the momentum to the downside is waning. Hence,
downside momentum.
yeah,
Okay.
hence be ready for anything.
Okay. I love it. Keith, tell us how wrong Mish is using the same charts. If you could, we'll go back to, I don't want to instigate too much, but let's go to your monthly
This
chart.
is feeling very familiar.
You may not be having to play up some of this, but I don't want to know what you're playing up and not.
All
The
right,
monthly
so
chart.
let's go to the monthly chart.
Yeah.
Okay, so can you put in a trend line from the lows, I think in 2005,
Yeah.
and put in a valid trend line
Yep.
to the recent lows in, I guess, 2019?
Yeah, right about here.
Okay.
Yeah, so connecting that low all the way up to here, kind of getting up to that point.
Yeah, so
Yep.
you can see you've broken down.
Yeah.
It's not a fake breakdown because we've had multiple consecutive months close under that critical trend line.
Got it.
So to me, the trend is still in effect.
Okay. Following price.
Following price.
Would you look at the weekly and daily as well?
Absolutely.
Let's
So
do
let's
it.
take a look at the daily. So the other, the weekly
Weekly, yep.
chart. Yeah. So if you take a look at the weekly chart, our real motion indicator is basically showing continued drifting to the downside.
Yeah.
The reversal that occurred in the May timeframe failed. So that means there's actually a lot more potential momentum before it gets oversold again. Because you can see the lower Bollinger Band
Yeah.
on our real motion indicator is showing there's plenty more before it gets into potential mean reversion territory.
And just briefly, if you could, Keith, for people that aren't familiar with your proprietary indicators, the real motion indicator, what is that summarizing for you?
That is really taking a look at pure momentum of price. Momentum often precedes price.
Yeah. Yeah.
So that is really looking at the performance over various moving averages with a baseline.
Momentum appears to be going down, Ms. Schneider. Let's go to daily. You'll have your chance to rebut here in a moment.
Okay. So on the daily chart,
Yeah.
what's also interesting, you have a similar reading
Yeah.
with momentum. You had a failed reversal signal, right? Mean reversion signal. You can see when you moved up, and you actually did have a new closing low, basically,
Yeah.
or matching it.
Yeah.
So to me, more momentum on the downside is certainly possible.
Yeah.
So there you have it. And if you back up to the fundamental picture, right now you've got, depending on who you use for the benchmark, you've got inflation somewhere between 8 and 10%,
Yeah.
and bonds at 3.8%. So that means all the pension funds are actually losing value on a relative and absolute basis.
Yeah.
And so that means the Fed is in a tough spot. Strong jobs, lots of inflation,
Yeah.
and they're going to be in a situation where even putting on a pause
Yeah.
is going to be difficult.
You know, it's interesting, Mish, when you were talking about sort of the bull case, I'm thinking about it, right? Martin Pring was just interviewed a little earlier by Bruce Frazier, really fun conversation. And Martin wrote an article a couple weeks ago really talking about why the bond markets are so important to watch. If we do get that play out where the bond markets actually rotate higher, rates come down, what would that mean for the broader equity environment from your perspective?
Well, even though everything that Keith says is logical, this is a very highly charged emotional situation. And so what it means is that the emotions switch from doom and gloom to wait. Not only is the Fed going to possibly pivot, but it also possibly, for all these people out there keep talking about this is the best time to invest, best time to invest. That's what people hear. We are trained bulls by nature. Most people have never seen a really sustained bear market. That Fed hasn't saved the day. Yeah. And so the emotions will be, yay, the Fed is going to save the day, everything's safe, and go back in. Whether that's a sustainable rally, we don't have to discuss that. We've already discussed that in other forums. But yeah, I think that we're looking more at the emotional aspect than the actual logical aspect when it comes to the fundamentals at this time. Not to mention the habits of people to buy.
It's hard to disagree with the emotional state of the markets, which certainly has been charged up in many ways. There are relationships to a marriage that we will not get into for the sake of time, but there's certainly relationships there.
I have one final comment.
Please.
Happy wife, happy life. She's probably right.
Well done. So, just to finish off, Keith, if you are true in terms of a bearish, bond environment, if bonds do go lower, we have interest rates that obviously have been going higher through the course of 2022. 10-year yield hit 4%, which seemed like an outrageous target a couple years ago. We're there. If bonds do continue lower, do you have a sense of where you would see interest rates going? Where would the 10-year upside potential be in your opinion?
I think it depends on where inflation is.
Yeah.
And the Fed is really going to have to try to get this under control.
Yeah.
Otherwise, we've got a situation where pension plans, which are a bigger liability, are underfunded.
Yeah.
So, if inflation sticks at 10%, we should really be at 12%.
Yeah.
On, the 10-year. So we'll see what happens. If inflation comes off and the Fed has been successful at, pausing that, then you could see a big change, of course, and bonds stabilize and the market goes up.
Now we only have about 30 seconds left. Do you share each other's charts in real life, or was just for the case of for the sake of this broadcast that we did it?
We try really hard to keep a boundary between work and our marriage. It's not so easy. But yeah, we have pillow talk sometimes that's really strange. Like, did you see the gold chart recently break out? And it's like 2 a.m. and like, oh.
Or what do you think about art?
Right.
Maybe the subject of a forthcoming Stock Charts TV special, but we'll get to that another time.
Right.
Mish and Keith, knowing both of you, I really appreciate you guys coming to Redmond and being part of our bull bear debate.